the resources and various options available to you as an operator. Through a panel discussion from 4 different areas of expertise, our goal is to provide insights into strategies you as operators should be thinking about and deploying with regards to the COVID-19 impact, to include human capital, cash flow and financing, and business strategies, focusing on recent legislation. This webinar is brought to you by Performance Food Group to provide you with ideas and resources to help you in this time of industry distress. Next. As you will see, page 2 contains certain disclaimers. Please review. In addition to the legal disclaimer provided, as you are aware, we're in a very fluid and ever-changing environment. We will be providing the most up-to-date information available today. As regulations and implementation guidance is finalized, certain information presented today may change or be further clarified in the future. Next. Here's today's agenda. Our intent is to provide information in each of these key areas to help you navigate the resources and options available to you during these uncertain times. Next. Each speaker today will provide a brief introduction when they begin their section. As you will hear, we have pulled together relevant experts as it relates to specific challenges you are facing, what you need to be considering, and available resources. Each of these panel members are managing directors at Fahrenheit Advisors. For me, my name is Keith Middleton, and I lead Fahrenheit's consulting practice. Fahrenheit, at its core, is an advisory and search firm that helps companies overcome challenges and find their way to growth, which is what we are all experiencing right now. We primarily focus on business strategy, finance, and accounting, and human capital. Prior to co-founding Fahrenheit, I was the CFO of Performance Foodservice. Next. We thought we would kick off with some real-world perspective from the trenches. Our firm and our clients, just like all businesses, are facing significant challenges. And like all of us, we continually ask, what are we doing to survive and how to recover? So where are we? Everyone's head is spinning. My own, my firm's, and our clients. We know that business disruption is not going to last forever, but we have no line of sight at this point to when it will actually end and what the new baseline will look like. However, we are seeing the beginning of owners and operators moving beyond the initial shock and awe into this is real and what is a new normal. We're having more and more conversations of what is next. As we will discuss later, the SBA loan program is quickly being rolled out, and that has, in the short term, subsided a little of the anxiety of how do I get through today or this week to a little bit longer view. As a firm and with our clients, we're focusing in 4 key areas: liquidity, cash forecasting, cost cutting, deferring cash outflow as possible, and the SBA loan programs. From an employee perspective, we are continually evaluating the layoffs versus furlough versus reducing hours and or cutting pay, and take into consideration how each of these options and scenarios will play into the new SBA loan programs. What you do today and next week and next month may impact the loan and potential loan forgiveness. With our clients, we are reaching out to them, working with them, and taking a very long-term partnership approach. And from a business perspective, we continue to pivot our business and our services to what is going to make us relevant now and into the future. For us, helping clients through the new regulations and how to survive and start thinking about recovery is a bit of a pivot from what we were doing. A local cycling gym is now renting out bikes and doing video classes as part of their pivot. We encourage everybody to do and think about the same. Next slide. Everybody's situation is unique, and we have found there is no cookie-cutter approach. But there are several key areas that each of us should consider if you haven't already. From an operator perspective, the obvious, stay open or take a sabbatical. As it relates to your employees, is it layoff, furlough, or maintain your employee base? And how will the new rules benefit the company, but also your employees? Do you apply for the disaster loan? Do you apply for the 7A loans? And finally, stakeholder communication plan. How are you communicating with your employees or potentially former employees, customers, vendors, and owners? With this, I will pass the discussion to Nathan Douay, who will focus on employee-related matters, including recent legislation. Nathan.
Thank you, Keith. Good afternoon, everyone. My name is Nathan Douay. I'm a managing director for Fahrenheit in the human resources area, and I have almost 40 years of experience in HR, 17 of which were in the food service industry, so hopefully I can identify with a lot of the challenges that you're facing in this new environment. First slide, please. Okay. With the passage of the Family First Coronavirus Response Act, there were many, many things in that act, and for this afternoon's discussion, we're going to focus on just a few. First of all, the impacts of this act took effect on April 1st, so yesterday. The requirements of this act took effect. Employers with less than 500 employees are subject to the mandates of this act. The primary parts of the act involve the Emergency Paid Sick Leave Act. Now, for employers, the Sick Leave Act applies to any employee who is on your payroll currently. There is no waiting or service time requirements in effect for that group of people. So if you hired someone today, they are effective. The Emergency Paid Sick Leave provides for 80 hours of paid leave for employees under certain circumstances. And it should be noted that if you have part-time employees, they are also eligible for this leave. So keep that in mind as well. As I mentioned, under the Sick Leave Act, part of the act, there's two sections under which employees can claim. One section, and just to not go through the details of it, basically pertains to situations involving the individual employee's own medical situations, whether they're being quarantined or they've been diagnosed with COVID-19 and so forth. When those situations are in play, the employee has 10 days of paid sick leave available to them, and that pay is at 100% of their regular pay. Other situations involving such things as the employee must take time off to care for a child whose school or daycare has been closed, that to care for a family member or a friend that is either being quarantined or has been diagnosed, those types of leaves are paid at 2/3 of the person's regular paycheck. So it is a little bit of a difference there as to how the individual is being paid. But it is a total of 80 hours of paid time, and it is available to the employee anytime following April 1st. The Family First Coronavirus Response Act also involves an emergency family medical leave provision. Now, some of you who are over 50 employees may be familiar with the FMLA since it's been in effect since, I think, 1988. In this particular case, the act has been amended and extended to cover individuals who have been with you for at least 30 days. The old FMLA, it was 12 months, so they really shortened that period of time, and it's available for people who are now with you for 30 days. Now, the Family Medical Leave Act provision is reserved only for individuals who are taking leave to care for a child whose school or daycare center is no longer available due to closures related to COVID-19. That is a very narrow reason why they can use the leave, and it is important that you understand that because other types of leave on the FMLA, like birth or adoption of a child, are still covered, but those are unpaid. This is a paid section of the leave, and the individual would be paid at 2/3 of their regular hourly rate of pay. It is important that employees also understand that taking the leave is something that they coordinate with their employer, and notice and reasons for of these leaves is also required. As far as the obligation to return to work, for both of these leaves, the obligation for an employer to return an employee to work is similar to those of the FMLA. In those particular cases, an employer must make every attempt to return the individual to their normal work when they return. If the employer involves or experiences a closure or a slowdown, it does not protect the employee from those actions. But a return to work is guaranteed, and the individual is to be placed back to work if at all possible. As far as coordination with other benefits that are provided by the employer, who are their standard time off benefits, vacation, sick leave, personal time, whatever the employer may provide, are accessible to the individual during these leaves. It's important to note that if an individual wants to use their prior time that they have under their current benefit package, they must coordinate that with their employer. As the employer, you are allowed to agree or disagree with the usage of their personal time during the time that they're out with one of these leave reasons. It is also important to, when you're making that decision as to whether or not you're going to allow that, please keep in mind that in some states, when a person is discharged or if they're laid off or they're furloughed to some degree, the employer is responsible for paying out those balances. So check your state laws to make sure that you know where that falls in your particular situation. It's not on here, but I do want to point out that one of the things that is important is that as you pay these leaves, the Act does provide you with an opportunity to capture back the cost of those leaves by taking credits against the taxes that you pay for your employees in the areas of Social Security and Medicare. So as you withdraw from the employee's paycheck their share of those two taxes, and the employer contributes to those two types of taxes, that tax bill can be used to offset the cost of providing these benefits. As a quick example, one of them is if you owe $8,000 for the period in these taxes, and you've had $5,000 worth of expense related to providing these leaves, then you are able or allowed to keep $5,000 of that and remit the remaining $3,000. So that's very important to keep in mind. There is a small business exception to this. The small business exception is kind of self-declared. It requires an employer be able to provide or establish that being able to provide these benefits or being without the employees during these leaves would challenge the viability of the company. If you make that claim, I would suggest strongly that you have someone in your organization who is in a position of authority to make that claim and to document your claim in the event that it's challenged at some point in the future. Next slide, please. As far as some of the challenges, some of the things that you should be thinking about, you know, Keith talked a little bit earlier about furloughs versus layoffs versus retain. Obviously, it's important for you to know where your business stands today, where you think it may be in the short term, and how you view the prospects of your business when this pandemic kind of starts to run its course. Will your area snap back into work, or will it gradually pick up? And how is that going to be able to impact the use of your workforce? How is it going to impact your ability to get back to people that you have maybe laid off or furloughed? And so keep those things in mind. One question I get often is, what's the difference between a layoff and a furlough? And generally, a furlough just insinuates that there is a strong possibility, or at least a possibility, that the individual will return to work and that there will be an opportunity for them to rejoin their employer. Layoffs are generally, the connotation there is that it would be a more long-term or permanent separation. Unemployment for employees and their options, obviously, is if they are released through either furlough or layoff, is to be able to collect unemployment. And unemployment enhancements are part of the package that was passed recently and signed into law, which provides for additional benefits for employees who are on unemployment benefits. So employees have some options there. As you've seen in the news, there's an awful lot of people collecting unemployment, filing for unemployment, and this is falling on the states to administer. So your state laws will take effect and will kind of guide the process there. Lastly, I think as you work through your process, I think it's very important that you keep engaged with your employees. I don't know each of your situations, but obviously if you want to retain or keep in contact with your employees, you want to be able to get them back as quickly as possible. If you feel you have to furlough or lay off, it's important to keep the lines of communication open with them, even when they're not necessarily actively working at your place of business. Let them know what's going on. Keep them posted about what's happening, what you see coming down the pike, and how you think this might affect them going forward. So the more you keep those lines of communications open, I think the more likelihood will be that when you need your employees back or would you like them back, you'll have a much greater possibility and much more of a success rate in getting those individuals back to work. So it's important to keep that communication open at all times. With that, I'll pass it over to Doug.
Thank you, Nathan. I'm Doug Jones, and I'm with Fahrenheit Advisors for 9 years as a fractional and consulting chief financial officer for small and mid-market companies. I have clients in a number of industries, including one longtime client in the food service, catering, and restaurant business. My prior career as a CFO includes time with a business that had a variety of retail operations, including franchise, QSR, and fast casual operations. Next slide, please. Wanted to talk a little bit about some quick tips on cash flow and cash management, some things that you can be doing right now. First thing is you need to put together a 30, 60, 90-day cash forecast. And I know that's hard to do. It won't be perfect. You'll have to make many assumptions, but it is a starting point, and you can't make intelligent business decisions without doing that. So that's something I recommend everyone do. Second things is receivables if you have them. And I know that that's not normally a big issue in the restaurant business, but there may be some who have catering operations or corporate clients. For those who do, I want you to call all of the customers on your open AR list, not just the delinquent ones, and have a conversation about when the invoice is due and if there's anything that would keep them from paying that invoice on time. Customers will be looking to pay as slowly as possible, and you can expect delaying tactics. Oh, we need a copy of your insurance certificate or something like that before they make payment. So get in front of that and ask those questions now to make sure that you've done everything you can to make it likely that they'll pay on time. The third item listed is deposits, and there are two kinds of deposits, one that you've paid out and one that people have paid to you. Take a look at your balance sheet. You may have some deposits on there for either conventions or trips that you were planning on doing or equipment you were planning on buying that most likely you will now. And you want to really work to get that cash back into your business if you can possibly do it. On the other hand, there are deposits that have been paid to you, possibly for a future event. And if you're asked to refund them, which you probably will be in some cases, do your best to talk the client into leaving those funds on account for when that event is rescheduled, and perhaps even offer them a discount to do that. In terms of debt service, rent, and lease payments, as you will hear throughout this call, communication is key. You need to be communicating with your landlord and your creditors about your situation. I recommend asking all of them for a relief, all of your financial partners. Extended terms, payment holidays, whatever you can get. It may not yield anything, but it cannot hurt to ask. I talked to a client who told me their landlord wouldn't do anything for them. I told them to go ahead and ask, and in fact, they got rent deferred for a month. So that certainly was better than nothing. Then on lines of credit, if you're fortunate enough to have a line of credit, please communicate with your banker, have an honest and open discussion. They know the news is bad, but they don't like surprises down the road. They'd like to anticipate what's going to come. Next slide, please. Government programs, a lot of talk about government programs and incentives these days. And if you could see my notes for this call, you would see pen scratches and changes being made right up to the minute that we recorded this, because things have been changing and will continue to change. So we will run with what we have now, as Keith mentioned earlier. It's been very chaotic. First thing that's out there is the Qualified Improvement Property Fix, which was something that the restaurant industry has been looking for a long time. A few years ago in the tax law, through an error, they took away your ability to depreciate renovations over 15 years, instead making it 39 years. Well, that got fixed going forward, and even better for 2018 through 2022, these renovation costs and improvements can be immediately deducted. So if anyone has the wherewithal to use this downtime to make needed renovations, this would be a good time. And if you made improvements in 2018 and 2019, you can actually amend your tax return to get the faster write-off. Of course, review the specifics of your tax situation with your tax accountant. The second issue is unemployment, which Nathan talked about a bit. There is an additional $600 per week, additional federal benefit on top of the state benefit through July 31st. That's an important benefit that you want to make sure your employees that you've laid off or lay off in the future, they are aware that that is out there. I also wanted to point out that this is also available to partially unemployed people and self-employed workers. And they may not know that. I actually have a self-employed brother-in-law who had no idea that he could apply for unemployment now, because normally he would be barred from doing that. So make sure you communicate that to other folks in your family or circle of friends. And there are several cash flow improvements in the law, some of which you can take advantage of with other programs and some that you cannot. That's why I say on the slide how they fit together. The first is delayed payment of employer portion of payroll taxes for all of 2020. You can actually pay them in 2021 and 2022. That is not available for employers who get loans under SBA 7A, which we'll talk about in a minute. And I think it's very important to remember that this will not eliminate your legal liability to pay these taxes, and a reminder that officers of the company can be held legally liable for failure to pay when due. And my bet is many of you know of operators who got in trouble with the feds for not paying their payroll taxes, and that's not a pretty sight. The next incentive is the employee retention credit. That's a fairly complex calculation, and will be available to some of you, but once again, it is not available for those of you who get debt relief under the 7A loan programs. We can go to the next slide, please. SBA loans, a lot of talk about this. Two types, the economic injury disaster loans, EIDL. These are available to companies with 500 employees per business. It's not yet 100% clear how that's being applied to multi-unit operators. That probably depends on your structure, where you have separate federal IDs and the like. So that's something that if you have more than 500 would need to be looked into. These loans are up to $2 million. We're told that's being underwritten based on 6 months worth of operating expenses. You also, under these loans, can get a $10,000 advance very quickly. And we've actually seen that just getting started now. The rate on these loans will be 3.75% for up to 30-year amortization. And there is no personal guarantee on the first $200,000 of these loans. I will point out, you hear a lot about debt forgiveness. There is no discussion of debt forgiveness with regard to the EIDL loans. The second loans are the small business interruption loans, which you've also heard as payroll protection or paycheck protection, a lot of different names out there, PPP. These are eligible also for businesses with under 500 employees, but there is a very specific workaround for people in the hospitality industry, including restaurants, where this 500 limit will be applied by location. And while it's a little bit complex, it's intended to let an operator say with 6 locations with 100 employees each for a total of 600 to actually apply on a location by location basis and still come in under the 500. This limit for these loans is the lesser of 10 million and 2.5 times average monthly payroll, including state taxes and benefits. So that's a calculation that you need to make to figure out what your maximum loan is. To that, you can refinance other SBA loan balances that you have. Interest rate is statutorily not to exceed 5%. In fact, the loans right now are being issued for 0.5%, which is a good deal. Loan terms were originally supposed to be up to 10 years, but up until very recently today, as a matter of fact, we saw that that was changed to a fixed term of 2 years. And since this is part of the SBA 7A program, it's administered by banks, not the SBA directly. So you will want to get in touch with your banker about taking advantage of an SBA 7A loan. You can use the proceeds for these loans for salaries and wages, mortgage payments, rent, utilities, and interest on existing debt. And on these loans, there is no personal guarantee and no collateral. So very, very favorable for a lot of folks. The exciting part about this loan is the potential for loan forgiveness. And this is where you can get up to 8 weeks of the eligible expenditures can be forgiven, subject to 2 tests. So the first test is if you've reduced salaries for any individual by more than 25%, that amount will not be forgiven. And then there's a somewhat detailed test about whether your full-time equivalent employee count has reduced. And won't go into the specific dates in this setting, but to make a long story short, if you reduce your head count from earlier this year or last year, you will see your debt forgiveness reduced proportionally. So if your head count's down 1/3, your debt forgiveness will be reduced by 1/3. I see this as a no-brainer. I think most of my clients are going to take advantage of this. Understanding if you have a significant cut in your workforce, your debt forgiveness will be reduced. But I still think if you can get 2 months worth of payroll or 2.5 months of payroll at a 0.5% interest rate, even if 100% of it doesn't get forgiven, it's still a good deal. There's been a lot of confusion over applying for these loans. An application came out the other day that looked like it was final and now shows up on the SBA site saying draft on it, or sample, I think. So there's still a lot of question, but get in touch with your banker and they should be able to give you some guidance as to what needs to be completed in order to apply for these loans. And to a lot of folks, I'm also recommending that you go ahead and apply for the EIDL loan as well. That you can do right now, right on the SBA website. I'll be honest, there have been problems with that. It's crashed due to too much activity, but you can apply right on the SBA website for those loans. And as I said before, there is the possibility of getting a quick $10,000 infusion through those. You can apply and not accept them. So to me, it doesn't hurt to be applying for both of these programs at this point. And I'd also point out, if you're applying for that 7A PPP plan, please don't yet take advantage of your delayed payment of payroll taxes or the employee retention credit that I mentioned before, because those won't be permitted if you also receive one of those loans. The last thing on financing I wanted to mention is state and local programs. Different things are being announced every day. Use your local association or Chamber of Commerce or whatever to find out what's going on in your state, and local area. And with that, I'm going to turn it over to Chip, who's going to talk to you on overall and stakeholder strategies and communication. Chip?
Thank you, Doug. My name's Chip Bowman. I'm a managing director here at Fahrenheit, and I work with companies of all different kinds and sizes. I spent the first half of my career as a corporate banker, primarily working with companies that were in some kind of turmoil or some kind of distress. I worked with a lot of entertainment and restaurant groups, as well as private equity-owned and venture capital-backed companies. And then the more recent half of my career, I've been in consulting, mostly in interim management roles with companies in a turnaround mode or in some kind of high growth mode. And the similarity of their challenges is very common, though the root causes are very different. I'm going to talk today about business strategies, surviving today to thrive tomorrow. A few things we've talked about as kind of absolutes. Keith started out with the comment that our heads have been spinning, and that's really a worldwide thing. Everybody's head is spinning. This is unprecedented, and there's clearly not a playbook, as well as there not really being cookie cutter solutions for what you should do. So with that, what do you do? So before I jump into my talking points, I want to start with a quote that I really like from Peter Drucker. He said, "The greatest danger in times of turbulence is not the turbulence itself, it is to act with yesterday's logic." So in summary, what that means is things changed. It happened to you. You have to deal with it. So we need to figure out what to do now, and then we need to start doing it. So a few things I've learned as it relates to strategy in times of turbulence. One, you need to consider your strategic alternatives. That means refocusing your business and or your operations on strategies that work today. So you start with the end in mind as you work through this exercise. You want to define what your new success model looks like for today. What does success look like right now? Don't get hung up on what you were trying to achieve before, but decide what you're doing now to survive in order to be able to refocus on your long-term plans later. So some thoughts of things you need to think about. Do you need to pause operations? Take a sabbatical? Or is it just a time when you want to readdress the market a little bit differently? Become a takeout operation or move to take and bake, or scale back your hours. Is this a permanent or a temporary change in your strategy? And then whatever you decide, you need to make sure you size your operating resources and build your operating resources around how you do that successfully. So you might need to change your menus, change your staffing levels temporarily, rethink how you supply your restaurant, how you address location, how you address hours of operation. So make sure that you're setting up your current pivot for the most success you can have in the moment. Secondly, you really want to think through contingency plans. I know it's hard when you're already working off a different plan and a different set of requirements than you started out. But think about contingency planning in three different cases. I like to start with my base case. That is, what do you really think is going to happen based on what you know today? What's your best guess as to what's going to unfold? And then from there, you also want to think about what are the things that could go worse, and what do you need to do differently if those things happen. And then your third scenario would be your best case of what happens if I planned for the worst and it's actually better. How do you move and pivot as things unfold that are better than what you planned for? And hopefully for all of us, that's what occurs. Think about things like the duration of this disruption, things like changing behavior patterns of your prior customer base, disruptions to your labor force, changing resource needs that you might have as a result of having to change your business. And then you also can't, in this particular situation, not think about what happens if you or one of your employees gets sick. That is a huge and immediate impact on your business. So as you think about your business strategically, I really want to encourage you to think through the ways to be relevant both near and long term. Every business is having to pivot in this current business disruption. But you want to adapt and adjust what you need to do now, and also what the new normal will look like when business disruption lifts and we can go back to levels of normalcy. So to survive today, to survive for tomorrow, you have to thrive and survive today. Think about also in this particular thought process, the decision triggers that would cause you to make additional decisions. So if something happens, what are the things that might happen that would require you to plan more for your worst case? Or what are those actual triggering events that would give you signs of things being better than you planned for? I also want to talk about a couple of different stakeholder groups and how you need to maintain and grow the confidence through communication. So your employees and your customers are two of your most important stakeholders. So one thing I always encourage businesses in turmoil to think about is staying true to your principles. Know what those are, and make sure that the decisions you make today don't violate or rub up against your principles. So that might be decisions around how you work and work with and treat your employees. As it relates to your customers, those are the things that drive how you run your business around quality, service level, speed of service, variety, the training and culture that you maintain for your employees and your customers. Also, in your stakeholders, you want to make sure you're developing a well thought out plan for how you communicate, and this also includes a broader swath of your stakeholders, including your landlords, your vendors, and potentially investors in your business. So as you think about your stakeholders and communicating with them, remember this: they want to hear from you. They're willing to help you, but they need to know what you need. And they are also having to work through business decisions on their side, so they may or may not be able to give you exactly what you need or all the support you're asking for, but they really do want to hear from you and want you to communicate with them. So start with identifying a list of who the stakeholders are, quantify and write down and determine your needs, and then I really encourage you to do this. Plan for what you're going to ask them. Don't go into those conversations without an understanding and a plan for what you need to ask. They will tell you if you ask for too much, and if you're in line with what they can do to help, they'll usually be willing to work with you. Remember, they want to get paid back, but they also understand that these are unprecedented times that people need to work together. And lastly, I would just say on stakeholder communications, please do everything you can to avoid surprises. Your stakeholders don't want surprises, and if you don't surprise them, in large part, they won't surprise you. So please communicate clearly and often with them. And then just a couple last points to wrap up. Make sure you're planning ahead for your access to resources and capital for when you can reopen and move back to regular operations. You want to make sure that you've got a plan you're working towards to make sure that when you do get to move through and out of this business disruption, that you've got access to resources to ramp back up quickly. And then lastly, big picture, and just to kind of wrap up everything, you really want to communicate and be transparent with your employees and your creditors and your customers. Again, they're important parts of your business. They're there to help you. They're for you, and they want to be communicated with clearly and transparently. So thanks for listening. I'm going to hand it back over to Keith, who is going to take us through some Q&A.
So we're first going to start with some resources, and I think I'll let Keith kind of talk us through the resources.
Absolutely. So we've provided several key resources for further information, both on Performance Food Group's website as well as Fahrenheit's Insights page. As you will see, most of those resources are going to be specific government site and links. As we have found, this is the best place to turn for the most accurate and updated information. There's also a couple of industry-related links. As you look at those resources, they do include specifics around the Families First Response Act, as well as each of the SBA loan programs. In those resources are specific requirements of the employee and the employer, as well as checklists as relates to applying for each of the loans. As it relates to the 7A loans, there are standard checklists and data that will be required to be submitted to the SBA, but your specific bank will be the best resource to help you with the requirements and the data submission, as each bank, we're finding out, has a little bit different request list. A lot of it is financial information and payroll information. So your accountant or a third-party accounting firm or consultant can help you pull that information together. As you're looking at the 7A loan, going back to something that Doug said, the first step is getting the loan. And that should be step one and the first priority. The second step is the loan forgiveness. Remember that this program is to try to keep workers employed. With that loan forgiveness, you should already be thinking about what are the requirements that are needed to be submitted to your bank, to the SBA, to get the loan forgiveness. And there are some checklists out there already to help you start thinking ahead of when you want to apply for the loan forgiveness to do that. So there's resources and contact information on both PFG's website as well as Fahrenheit's. And with that, we will go to a couple of questions specifically that have come up. And first, I guess I'll talk to Nathan. One of them is under the paid leave that's provided under the Act. It's supposed to be paid at the employee's regular rate of pay. Since a lot of restaurants, employees earn a combination of a small base pay with tips, how do they calculate the regular rate of pay?
Okay. The Act borrows pretty generously from the Fair Labor Standards Act when it comes to that. So in the Fair Labor Standards Act, basically what they say is that a person's regular rate of pay is comprised of anything such as a small base, a tips, it could be piece rate if they were in a warehouse environment, and it could be small bonuses that potentially the employer pays over the course of the year. So they take all of those things and they lump them together. in the Fair Labor Standards Act, they use that rate to calculate overtime payment. So overtime is not involved and not included in that rate calculation. So if you have a person who has variable types of income that makes up part of their regular rate of pay, what the Act is suggesting is that you look back over a period of 6 months, if possible, if the person's been with you that long, and calculate their regular rate of pay, meaning the amount of money they've made divided by the number of hours they've worked, excluding overtime, and come up with an average rate of pay. So the longer the person's been there, the longer you'll have to kind of calculate that regular rate of pay. The shorter they've been there, you go back to the date that they were hired, and you make that calculation. But again, it includes all forms of income with the exception of overtime.
Great. Under the Act, there's a lot of options for new employee leave. If I'm a small business, it's hard to have my entire staff or a large part to go out at the same time. Is there any way I can limit the number of employees who ask for paid leave at the same time, or what are my options?
Okay. Really, you don't have a lot of cards here. I mean, if the employee is taking time off due to their own illness, their own diagnosis perhaps, or they've been told by their healthcare provider to quarantine, and unfortunately that hits multiple people of your organization at the same time, there's not a lot you can do to suspend or to kind of work out an arrangement with them as to who's going to take leave first. So there's not a lot, unfortunately, you can do in the event that the leave that's being taken is because of one of these situations. You'll probably have a little bit more flexibility if they're taking time off to care for a child whose school or their healthcare provider is no longer available. There may be some possibilities where you can work with the employee to where between the employee and their spouse or their partner, they can kind of alternate taking time off to care for the child. You may be able to do that because the leaves, especially the family medical leave, they're allowed to take them intermittently. In other words, you don't have to take them as a block. You can take them a little bit at a time over the course of a period of time. So there may be some opportunity to work with the employee in the area of child care, but unfortunately, in some of the other areas, if it's due to illness, you probably don't have a lot of discretion over when they take it. Now, one thing I'll add to my answer is, under the Act, employees are required to give you as much notice as they can, and you're not prohibited from asking for documentation to justify their taking of the leave. So don't be shy, and don't hesitate to ask for that information, because it is something they're required to provide, and there's multiple things they could provide to you. So try to manage it to the best of your ability where you can. Work with your employee so that you kind of balance their needs with yours, and try to work out the best possible solution. But unfortunately, the options are limited.
Okay. This is probably more of a strategy question. How do I go about re-engaging employees that I've already laid off or furloughed?
Well, I mean, to me, I mean, employers always talk about their culture. They talk about how great their culture is in many cases. And I think in times like this, we're all going to find out exactly how good those cultures were or are, and how strong your relationship is with your employees. I think that's going to play a big role. If you've had a good, strong relationship with your employees, they were a tight-knit group, maybe small, but tight-knit group, and they leaned on one another, they liked one another, they socialized perhaps when they weren't at work, I think you're going to see a much greater return to work possibility with them than you would others. I know the restaurant industry and food service in particular has a pretty high turnover rate, but if you're one of those employers that is fortunate enough to have a pretty stable base, I think for the most part you're going to have a good opportunity to retain them and keep them. But that also goes back to the comment I made earlier in my part of the presentation, and that is communications. It's keeping them informed. Even if you reach the difficult decision that you have to furlough or lay them off for a period of time, keeping in touch with them either daily, weekly, every other day, letting them know what's going on, seeing how they're doing, you know, in their personal lives, the challenges that they're facing, keeping that door of communication open between the two of you is also going to play a big role in the ability to get people back to work. Because, as I mentioned earlier, no one knows how quickly this thing will snap back, and it may be that you'll find yourself in a situation where you need them back quickly, and if that relationship is strong, you have a good chance of seeing that. So I would keep those lines of communications open and hopefully lean on that relationship or that culture I've developed over the years.
Great. All right, a couple of questions for Doug. One of them is, under the SBA loan programs, how long do we believe it will take to see the cash under these programs?
Boy, that's the million-dollar question. And I think the answer, while it's still an unknown, is probably better than it was a week ago when we didn't know when the applications were going to come out for the 7A loans, which came out this week. The best information we have now is that's measured in a number of weeks, and I can't tell you whether that's 2 or 4. We need to remember this is, the word we keep hearing is unprecedented, and even though much is automated these days, both at the SBA and the banks, the sheer volume that they're going to be dealing with in the short term is just boggles my mind. And so I think anybody who has an idea you're going to put the application in and see money in a couple of days is mistaken, and it's going to be measured in a number of weeks.
Without, I think you talked about it earlier, but as it relates to the loan forgiveness, how much of the loan will be forgiven? Or how does the loan forgiveness work?
Sure. Well, if you use all of your funds for the eligible purposes, which are payroll, including state taxes and benefits, and rent, and mortgage interest, and utilities, and the things that are listed under the Act, if you use 100% of your funds for that, your base is that you will have all of it forgiven. Now, that's then reduced in 2 ways. The one is, as I mentioned, if you cut anyone's salary by more than 25%, that can reduce the amount of the forgiveness. And then is the full-time equivalent employee test. How many employees do you have now versus the base period? And it's really now through June 30th versus the base period. So it'll be a situation by situation calculation of what your percentage reduction is. If it's flat or if it's an increase, there'll be no reduction for that. My guess is in the restaurant industry, many are going to have a reduction, and whether that ends up being 10 or 80% reduction will directly impact how much of your loan is forgiven.
Okay. I think with that, we'll go into closing. There will be an opportunity for participants to submit questions. But in closing this presentation, we'll be emailed out to all participants with a link to PFG's website for additional information and resources. You will also receive a survey where you'll be able to submit questions. Thanks again for listening in, and please stay healthy.